Hi, good afternoon, everyone. I'm Rajiv Desai from Pelican, and thanks for joining our session. And our session is today on the practical use of AI to exploit the ISO 20022 data, as we all are aware, and probably many of us are in the midst of migration to support ISO data message formats related to cross-border payments or a local RTGS or a faster payments. So there is a new way of participating and capturing the payment processing data, and how do we leverage the data to serve all of our respective customers to give them the value that they are looking for. So in today's conversation, I have esteemed panelists who are participating with me today. We'll start with Derek Vernon. He is from Bank of Montreal. He is a global head of payment modernization at the bank. We have Ken Wong from TD Bank. He is the head of GTP product strategy and innovation at the bank. And we have Parth Desai, founder of Pelican, and he is based out of London, and he is an AI expert with 25 years of experience. What I'm going to do now is that I'm going to hand over to Derek to give a bit of his perspective before we get into Q&A, followed by Ken and followed by Parth. So Derek, over to you, please.
Thanks very much, Rajiv. It's great to be here with Pelican and with my colleague Ken from TD Bank. As you stated, my name is Derek Vernon. I'm with BMO Financial Group. I'm currently responsible for enterprise payments modernization, also responsible for our commercial deposits business and our North American corporate card business. I'm also the industry chair of the Payments Canada Industry Steering Committee. So spent a lot of time on payments modernization and with many of you that are attending today. So thanks for choosing us. We know you had options. So specifically on PayMod, I'll speak just for a moment from BMO perspective. We stood up our team, about 4.5 years ago, and it's been very busy delivering a number of legacy transformational technology replacement initiatives. That's where we've gotten to know our friends at Pelican. And through doing that, we've been putting in place a lot of the necessary technology, the updates to operational processes, driving new product capabilities through connections to new payment rails, both in the US and Canada, that underpin all of our North American payments modernization ambitions. One key ambition for us, however, is to be prepared as the world moves to ISO 20022 data standard. It's a global interoperable standard. You've seen a lot of ISO 20022 covered at the sessions through the summit, and there's a reason for that, because it's critically important that we all understand, what is it, what does it mean, how do we take advantage of that. There's a number of areas that we've been focused on as we prepare for the change. As I mentioned, technology transformation, whether that's in payment engines or in our payment hub, in our channel systems. At the end of the day, data is the new currency. We often refer to it as that. And all the benefits that it's going to bring to our customers is really, really exciting to me and to my team and to the rest of the bank. And I know I'm speaking for other FIs as well. And it's an area that, specifically from my perspective, I think that we can differentiate the customer experience and continue to offer more and more value to our clients. So I'm really excited to be here.
Thanks, Derek. I appreciate it. Ken, your perspective, your intro, please.
Sure, thanks. And thank you for having me here. What Derek said, we are spending a lot of time, a lot of money on modernization. And the question always is why, Part of it is data, and we've known for decades, I guess from the beginning of trade, that data is the most important thing. In more recent past, it'll be looking at the AR and the AP processes within our clients, where because we can't pass them the full data, they are all having problems reconciling the receivables, and therefore the supply chain actually slows down that way because the corporates will either not release the goods or not release credit before they can reconcile their invoices. And so it just slows everything down in this world of instant gratification where just-in-time processing is so important. But I think we need to go take a little bit of history now. You know, my feeling is this challenge of data, especially remittance data, did not start until we started building electronic payment systems. So in the olden days where we were still bartering, right? I exchanged my cow for a bag of rice. You knew exactly what you were doing because that is the data, that's the information. Even when we went to paper clearing, a check comes and we have a stack of invoice data that we pass on to the person we're paying so they could actually reconcile. But the advent of electronic payment systems, I guess, let's just say 20, 30 years ago, where look at SWIFT, 140 characters worth of information. Look at our systems of, in the AFT world, 16 characters. That's why we built EDI. But because we didn't look, I guess, forward enough and we didn't understand how the clients actually use data, we never built our systems that way to cater for the actual data itself. And it's only until recently where everyone's talking about big data, like what Derek said, is the data's the new, I can't remember exactly what he said, but a lot of other people saying it's the new gold, it's the new oil, right? That the attention of data only came to the limelight again maybe 5-6 years ago, I would say, because there didn't seem to be any impetus for the banks, the networks to actually do anything about it until 5 years ago when fintech started coming in to challenge the space. So I think right now is very exciting times for us from a payments and from a data perspective, especially with ISO coming up and being seemingly the universal language of, I guess, won't call it payments, but transactions right now, so that the data can actually flow. I'll leave it as that for now.
Yeah, and thanks, Ken. I mean, that is a very good analogy you provided. And it's very true that when we look at it, how this our payment business evolved, and I agree that it is changing from payments into a transactional, and a transaction usually has a lot more data, and that needs to be further leveraged. There is a necessity, and it's a confluence of things that has happened. There is a competition that is happening. Our customers are becoming a lot more smarter and to a certain extent aggressive and demanding that we meet their challenges. And there is a market pressure also to make things better and have that revenue stream stay there. So there are multiple factors coming in. So I will turn to Parth. And Parth, from your point of view, where you are a technology vendor provider providing the services and the software to the bank, where do you see how this is transforming and helping from your perspective?
I'm also very excited, actually, like Ken, to see the next few years how things evolve, because I think ISO 2022 and the data that banks have will give banks to fight back with the fintechs and incumbents to actually gain back control and provide engaging solutions to their customers. Right now, this is possible because, and this is actually necessary because in this instant open banking, instant world, I mean, where there's open banking, where fintechs are entering your space, you need to provide proper solutions and which are engaging, and so that you are not disintermediated. Right now, there is a lot of attention being given to ISO 2022. But let's understand, ISO 2022 is giving you a structure, an approach, a standard which can carry information from one bank to another. However, what is important is that we recognize that it is just an envelope. It can carry information. However, the letter has to be put in by the banks. We have to pass the information back to, we have to put the information in the messages to actually send it to another place. Now, when you look at the letter, when you receive a letter, you need to open and read it. That's where the value of data comes in. If you have a data which is in there, however, if the computers cannot read it, you cannot automatically process it. You cannot automatically make sure that it is everything is straight through and you can leverage value out of it. So that is where the data and that is where the AI comes in, and especially the field of natural language processing, which can actually understand the data, read all those messages, even it is free format, structured, unstructured, whatever language they are using in, you can figure it out, you can understand that, and we can understand what the bank is trying to say or what the customer is trying to say when he's sending a message. Or when you're looking at the statements, what does this scripted 140 characters of data say? I mean, you will have large information, large amount of space in the ISO 22 messages to give all the invoices, but can you automatically reconcile? Is it always going to be structured? That is the problem, right? So I think that is what banks need to realize, that yes, the data will pass through. However, you need to be able to open the envelope, read the data within it, and understand. And that is where natural language processing comes in and helps you. Once you have that, I think it opens up a big, it has a lot of opportunities to, like the fintechs, to play with that. And it's an open game. How do you come up with new insights, analytics, new products and services, or operational efficiencies in your bank to make sure that you can leverage this data, learn from it, and then actually provide value to your customer. So that is the chance that banks have now to actually use the pipe that has been created by ISO 20022 structures, and then understand the data, because data is not going to change. They are going to be generated by the same back offices and accounting system and ERPs that was generating the empty messages for Swift or your internal messages right now that you are processing domestically. But still, you will have to now, using AI, understand this data and leverage that using machine learning to offer new products and services. That is where the exciting times are. And I believe we can gain back control, and the banks can provide engaging solutions and monetize on that, and also have internal efficiency to make things easier, faster, and cheaper. So I'm looking forward to the next 3-4 years to see how world evolves and changes from where we are today.
Thanks, Parth. Yep. Appreciate it. And as all the panelists said here, which is that this change is happening and we have to adapt to these changes. And how do we leverage the best that is possible to give something much more value that we have been providing? And one of the most interesting aspects in all of this is that historically, if you look at it, banks has always been a very trusted partner. We as a consumer always share information with the bank, compare to the fintech, because there is a historical reason why we have trusted bank, because they've been regulated by the government. There is a bank has a certain amount of fiduciary duty, and banks have been doing a very good job in terms of managing that information. And the bank has historically worked over the years and years of experience they have in interacting with their customers, be it a corporate customers, be it an SME or a retail. So there is a plethora of data available. So the bank has an opportunity now, look at the historical pieces of information, and this ISO message format is allowing bank to capture additional information, carry the pieces of information that has been available historically, and share with it. So this is going to be an interesting conversations. So before we get into the Q&A, I would like to start with the first polling questions. And this is for the audience. I would like the audience to look at these questions and please respond. That will give us, the panel, a very interesting conversation. So I will read the question. The first question is, do you see challenges in extracting, validating, and using large data available in ISO 20022? And there are 4 possible answers. Yes, we are ready and have tools available to use ISO data. Second one is, yes, we are currently evaluating available options, but no concrete plan. The third one is, no, we currently focus on support ISO 20022 standards. And finally, the fourth answer is, we have no plan and idea how to use additional ISO 20022 data. So these are the 4 choices. I'll wait for a few more seconds for audience to respond, and then I will answer those questions. Very interesting. I see the live responses are going on. I'll give few more seconds for people to respond. It's answer B and C are sort of competing here right now. Oh, they are neck and neck. Okay, very good. So, I mean, if you look at it, the percentage distribution, what I see are more or less evenly divided between first and the fourth question, which is that yes, we are ready and we have tools available, which is 20%, and we have no idea what it is. So that's around 22%. And while answer number two and three, which is yes, currently we are evaluating available options, but no concrete plan, which is around 34%. And the third is no, currently we are focused only on support for ISO 20022, which is around 32%. So answers are evenly divided. So thank you, audience, for your response. Appreciate it. This was good insight in terms of where the banks are in terms of their payment modernization journey and part of their ISO 20022 usage. So let's get back to the rest of the our Q&A sessions. So I'll start with you, Derek. And the question I have for you is that based on your experience and you have long conversation with your the customers, you're very familiar with your internal systems and processes. What insights and benefit will the ISO data in payments provide to the clients? And just elaborate a little bit, use cases so the audience appreciate how it has been used in your experience.
Yeah, thanks, Rajiv. You know, looking at the polling question, I think 20% of you are really glad that you attended today, and 20% of you could probably join us on the panel. But there's that, you know, percentage in the middle there that are just now starting to kind of scratch the surface and realize we've got some work ahead of us, and many of you have work already underway. You know, I really do think we've just scratched the surface here. You know, COVID is, I think, dramatically accelerated digital adoption, you know, at a pace that we've never seen. And, you know, we're seeing this across, you know, business to consumer, consumer to business, government to consumer, and business to business, you know, across all segments. We're seeing a far accelerated pace towards the adoption of digital payments. And, you know, part of the challenge often is trying to get customers to change their behaviors and actually start to shift. But I think COVID has really done that for us. A terrible thing, but you know, perhaps that outcome is something that we've all been waiting for in terms of digital adoption. And I do think we're going to continue to see a decline in the use of cash and checks. It's already, you know, you look at the graphs over the, you know, month over month, you can see a fairly sharp decline, and I think that's going to continue. You know, another driver to this accelerated digital payment adoption will be the availability of the richer data, and you've heard this in spades already today, and you're going to continue to hear this theme. And that's, you know, in part thanks to all the payments modernization initiatives that are taking place around the globe. I'm sure you've seen the statistics. There's at least 80 countries around the globe that are embarking in various payments modernization programs, some more ambitious like Canada, and others, you know, have already done some modernization, you know, in the past, and now they're having to remodernize, so to speak. You know, if I focus on Canada and the US, you know, we see numerous benefits that are going to be unlocked as we move to more structured and unstructured data, and as those data sets start to move across our payment rails. You know, the classic example that we often talk about includes, you know, the higher STP, straight through processing rates that we enjoy for incoming and outgoing payments, because we have that data and because we can leverage AI, robotics, machine learning type applications. And I know Pelican is very good at that. They've helped us in that regard. And we're seeing it, you know, in our high value payments system. We're on a North American system for high value payments. You know, we're approaching the mid 90% in terms of straight through processing. And that's leveraging data. And this is just the start. As we move to links and other payment rails that have the ability of moving more data, we're going to see even higher straight through processing rates. And then there's the account receivable reconcilement benefits that we often talk about, which are going to drive faster cash application for corporates. It's going to drive down manual exception processing costs and result in the working capital and liquidity benefits that our clients are always striving for. Another advantage that we see, and I mentioned this, is the elimination of that check. Many B2B partners, stakeholders are still using checks because, quite frankly, they have to, because the rails have not yet end-to-end adopted standards like ISO 20022. As we start to see that adoption, and as the rails and the legacy systems that each of us run start to upgrade to be able to move that data without truncating data, we're going to see, again, much broader acceleration and reduction in the use of cash and checks. However, the benefits can extend much further. And, I would encourage you, if you're a corporate or an FI for that matter, encourage, more cross-functional design thinking sessions. It's amazing, we do those. And as you put people in a room, hopefully soon in a physical room versus a Microsoft Teams collaboration room, when you put people together and you start really thinking things through from their perspective, what are they dealing with every day in their particular job function, and then you start overlaying more data, you start to really see the power in how we can leverage all of the increased data flow. I'll just add a few other perspectives here. APIs, application programming interfaces. I'm sure you've attended a lot of sessions already at the summit. The banks are starting to provide far greater access. We recently launched a commercial development portal offering a number of APIs, and we're doubling down in that area. We believe that's a really, really important area for corporates in particular that are going to want to access in real time, account information, full sources of remittance data, repositories. They want to get higher ROI out of those ERP systems that they've invested in. They need to start to predict cash flow requirements even better than they do today. And the data and through the APIs and all the additional data analytical capabilities are going to create even more value add in that regard. And I think we're going to see a lot more usage. Then as you start thinking about different functional areas, call centers can tap into data to help clients, in real time, start to really elevate the level of service that they're providing to customers. And that can be a bank providing service to one of its customers, or it could be in a corporate that operates a call center, being able to provide a much better level of service now that they can see the data in real time. And as Parth said, be able to handle and parse through the complexity and improve the customer experience. And services like requests for payment, we're going to start to see a higher usage of that once the data is available, and we're able to leverage and streamline, collection processes and give full transparency end to end. Insurance companies, the ability to accelerate, the claims adjudication and payment process in real time, using that structured data across all of the stakeholders involved in the end-to-end claims process, as an example, taking the friction out of that experience, I think is a really important thing. Cross-border, we see lots of benefits we're a major cross-border bank, and we see a lot of flows, and having, more ubiquity, using a standard like ISO is going to give us, I believe, a lot more advantage of moving those flows end to end across the border, and finally making that experience much better than it has been in the past. And maybe I'll finish on just alerts and providing enhanced advice and insights. That's something that I'm really, really excited about. We're already doing that, but I think with more data moving across payment rails, we're going to be able to take that to a whole other level and provide in real time, more personalized, data-driven insights to our customers, whether that's online, through one of our channels, or through APIs. So it's a really, really exciting time.
Thanks, Derek, for giving that very detailed, insightful information. And I was just going back and referring to the polling question we had, where almost 80% of people are just starting the ISO migrations, or some of them have not used the AI. And you are sort of a pioneering bank ahead of the curve in this regard, and you are part of the payment modernizations. So I had a quick follow up. One was that in your experience, you started this journey 4 years ago. So what are the key things that you briefly touched upon, having a cross-functional team working together, but what key advice or a guideline you provide the listener here that would be beneficial?
Another great question. I think really kind of stepping back and planning things out, as we approach payments modernization, there's so much to do. And, before kind of diving in and trying to rip and replace everything, which, obviously you can't do that. It's cost prohibitive and you just can't do that. Really prioritizing and looking at, listening to your customers, what are those use cases that you really want to go after initially out of the gate, and solve some of those customer pain points. It's all about the customer at the end of the day. I think sometimes it's easy to lose sight of when you think about payments modernization. We have all this work to do. New rails are being stood up, new regulation, new processes, but you have to stop and think about the customer. And let that guide you. You'll get that work done because that work is mandatory and it's essential. But make sure, we always try and deliver value along the way, while you're under the hood and while you're making certain changes to support, the implementation of a new payment rail, going back to how can I actually improve the experience for my customer? What value add can I add into the process? Parth, you made a comment about gaining back control. I'm not sure I completely agree with that. I don't think this is a control thing in terms of FIs trying to control the experience or trying to control. At the end of the day, there's great fintech out there. There's great big tech out there. They've got great ideas. As a bank, we don't always, know how to solve everything on our own. And we're very open to working with partners like yourselves, Pelican and other fintech, big tech, to at the end of the day offer enhanced value add. There's things that I'm great at, there's things that they're great at, and in combination, how do we work together, leveraging solutions to take advantage of data to, at the end of the day, add value to a customer. I think that's how we all win in payments modernization.
Thanks, Derek. I really appreciate the response you provided. And there, I could go on and asking questions, but let me turn to Ken. In terms of, Ken, your experience and what TD Bank is doing, it we've also embarked on a modernization. So you have done also various planning. But I'll just like a different question here, and which is, are banks really ready, and can they utilize the data to its fullest potential? And how could banks and its corporate benefit economically from it? Right? The idea is that it's a partnership. We work together collaboratively. So where do you see this is going? And just shed some light on that based on your experience.
Sure, thanks. Let me expand that a little bit and also talk about the client. Is the client actually ready too? So as part of my answer to your question, I'm going to answer one of the Q&A questions too. And let me just quickly read the Q&A question out. Basically, you said, you mentioned about better receivable reconciliation due to ISO 2022, but if the initiating party does not send this data itself, as not all fields are mandatory, how do clients update their ERPs, To a certain extent, I would say the client has been a lot more ready with data than the banks have. So clients, large corporates, have been sending rich data for many decades now. They might not send it to the bank because the bank can't utilize it, but they're sending it to store and forward services where, they say, okay, these are all my invoice details going to this person I need to pay. My payment's going this way. I put a reference number to it, and then it gets PDF'd, it gets sent as something else to the actual recipient itself. Some banks, the large globals at least have been offering these kind of store and forward services to the corporate clients for many, many years already. So if no one knew, I'm ex-Citibank, ex-Stanchart, and we've been doing that for decades now too. So the question on ISO and the actual formats the clients are sending out. So if you look at in the corporate world, each industry vertical also has its own format. What ISO does for them is eventually, yes, the fields elements itself are not mandatory, but if they can map those fields into an ISO, then the data can still flow. It might not be 100%, but what I feel from an industry perspective, industry vertical perspective, it took many decades for these industry verticals to come in to decide, oh, my remittance information will be in this format. Is it CSV? Is it BAI? And we'll have these fields. The industry itself will come in and map it to an ISO eventually. But they have not done that yet, I would say, because the payment systems in the banks are not ready to send the full ISO because the market infrastructures are not ready. It's only recently that, with SWIFT pushing ISO, that all the market infrastructures are starting to move towards ISO, right? Even when, let's just say, SWIFT was supposed to go in 2021, even the Fed and CHIPS was not ready, and there will be a disparity, right? So back to your question, are banks ready? Then the question would be, from your question is, what is full potential? So we've already talked about leveraging the data to give the data to our clients so that they can use it for the ARAPs to reduce costs, to streamline everything. But is that full potential? To me, full potential is more from a business intelligence perspective. Can I aggregate all the data across clients, across segments, across demographics to provide proper business intelligence to our clients? Clients will come up to us and say, okay, I'm looking to move into this area, but I don't understand it. When I say area, I mean geographical area, but say I don't understand it. What can you tell me about that geographical area? What can you tell me about the clients that will be there, what they buy, what they sell, what services that they need, right? The only way that we can, I guess, utilize data fully is to aggregate it, not for the client, but across clients to give that kind of data, to give true business intelligence. The other part from a full potential perspective is not just within the bank, but across banks, especially from a risk management perspective. Look at fraud, look at sanctions and all that, right? Each bank only has a little piece of the whole pie from a data perspective. So if I was a fraudster, I will open banks across the different banks and I'll do things under the radar. But then if I could aggregate across banks around the world, then I can really see what is actually happening from, a fraud perspective. So to generalize, are banks ready? I would say no. The question is, why are they not ready? Mainly because banks have enough data today to talk about the what's. What is a client doing? But they have no idea, because the data is not available to say why they're doing certain things. All right. The challenges that we face to get the data. Number one, again, is the payment infrastructures. Because they don't support it, we don't ask it of our clients. I believe that once we open this, once the market infrastructures, SWIFT and all the payment systems around the world start using ISO 2022, start giving the ability to move the rich data, we need to educate our clients, and our clients will actually give it to us, and then we will move the data for them. It's just that the infrastructures are not ready, and therefore, even if the bank is ready and we can't move it to the infrastructure, it is pretty much useless. Other challenges within the bank, I would say, is all our data is siloed into our different systems. So how do we piece it all together to give a cross-product client view? Again, I talked about the lacking of content, then the lacking in standards too, right? Even so, ISO is great that from an interoperability, we are starting to be able to move data across systems, across countries and whatnot. The other part that I feel that challenges from a data perspective within a bank is data is also disconnected because of the siloed nature. We build data silos based on product, and therefore the status of, say, a transaction between one silo and another could be a different name, and it could be a different status, so that we just don't understand the data itself. So there needs to be a big cleanup before we can actually utilize data to its full potential. Then from an economic perspective, I think from a corporate perspective, it's pretty simple. If I can give them the data in a way that they understand, it will streamline all their processes. It will reduce the liquidity requirements. It will speed up the whole supply chain itself. So it's more from I would say, a cost savings perspective and a trade flow perspective. From a bank perspective, the question is, can we even charge our clients to move the data? I think it's going to be completely commoditized. Where the value comes in and where we can, I guess from an economic perspective, is what I spoke a little bit about, is share data across banks. From a fraud perspective, I can reduce fraud, I can reduce, bad players out there. It will prevent me from getting fines and whatnot. So cost prevention. If data is structured from a payment, especially from a payments perspective, hopefully my STP rate will go up because it's all structured correctly. It will flow properly. Question is, where can I monetize data? I think it's all in business intelligence right now. It's not in the payment itself. It is in business intelligence. So ISO is just the first step to unite the world from a data perspective. And then it will be a competitive space to actually build products on top of that to, I guess, bring the true value of data out. Something that Derek said earlier on, it's, everyone's trying to do something, but if the base is not standardized, how can we actually build anything thereafter? Because the data will not flow.
That's a very valid point, Ken. I agree with you. A couple of points that you made. I was just listening very intently, and as we also have a global responsibility, so we constantly keep hearing from the corporates and the other banks around the world. And one of the key things is just evolving now as people are going through their ISO migration, which is that, yes, this is good, allow us to have a common language to base and communicate, but we still have to leverage. What you're looking at is a segment of the data from your customer side. But what you correctly said is that there are still silos at the bank. So bank needs to marry this ISO data with the siloed data that they have captured. And also one of the key important aspects that we are having with our customers and in the prospect in the marketplace is that the data categorizations, understanding what these data are and how they relate to each other, so that it gives you better insight. And that's when the banks can start monetizing the data. It is just not capturing an ISO data. Capturing ISO data gives you an operational efficiency. But if you want to have a top line growth, what we see is able to look at the various data that you historically have captured, making a proper annotations of the data, and then marrying in real time as they are passing through your system, and then provide insight to your customer. That becomes very valuable. And there are various ways to do that. So Parth, I'll come to you for that question, but hang on to it. Let me just quickly ask the polling questions, and then I'll hold your thought and I'll ask the question on that, how bank can do this using AI and all of that. So let me quickly go to polling. So I'm sharing a polling question here. I'll read that question. Do you plan to deploy AI-based techniques to validate, normalize, and enrich ISO payments data? And there are 3 answers for that. Yes, we have a plan in place. The second answer is no, we are exploring AI technique options. And currently we have no plan to use AI techniques. So I will hold on to a few seconds for participant to respond. And then we will use this information to further answer our questions. Again, very interesting. There is a sort of a race going on between answer number 2 and 3. It is no, we are exploring AI techniques, or currently no plan to use AI technique. So excellent. I see more responses are coming in. I'll just pause for 1 or 2 seconds before we close this poll. Okay, so the results are that the 20% is yes, we have a plan in place. Very interesting. While 35% no, they are just in exploratory mode of how AI techniques can help. And finally, around 42-43% is around currently no plan to use AI technique. So, Parth, coming back to you in terms of a question, as you heard from Ken and Derek, uh, what their point of view is about the data and how they see envisioning they are being used in their part of the payment modernization. So, coming back to you, and the very basic question is that why is data and AI important for a bank, especially with ISO 20022, based on the polling question you saw and based on the responses we heard from Ken and Derek?
Yes. So I think a couple of points Ken made were quite interesting. So I think starting with the aggregation of data across various siloed systems as a first place, right? I think that is where the problem starts with the data. You can, in ISO 20 or 22, send lots of data across the pipe now that is getting built in. But will the two parties communicating, will they understand? Yeah, or the two systems which are aggregating data or the two systems which are going to pump in data into the same data lake or a data warehouse are talking the same language. Because starting with the key field of, say, party field, that's where the problem starts, right? You have parties, different names of people in different systems. They have different first name, last name, middle name, and when you put them together, some things do not match, right? Their first name, the last name may have two last names, and how do you match them? And then the confusion starts. So you can't aggregate. So that is the first point that you need to look at to aggregate the data. Now, once you have this using artificial intelligence and natural language processing, if you can understand this data and normalize it, or can convert into codes or structures which are standardized using, again, ISO codes or numbers, you can make sure that the data gets aggregated. Once you have that, you can bring in business intelligence or analytics to better understand what the data is about, right? What do you have, what people are doing. Now, the next step is understanding why people are doing. That's where the insights come in. You need to analyze the data, and using various technologies available in machine learning, you can try to figure out what is the reason why people are doing it, what is how different people behave differently, and you can get insights into that, and then they can use that to understand the behavior of a person. Then you can, next step is to understand the predictions. So if they did like this for last few years, what will they do if these parameters change? That's when the predictions coming, and that's where the monetization comes in. Now, in the corporate domain, banks are not able to. Banks are only providing the plumbing between the parties for information exchange. But if you look at the SMEs and the consumer market, retail market, these people do not have all the sophistication of large corporates. They do not have all the intelligence or the systems or ERP system or treasury management system to manage their finances. So this is where, if banks can start analyzing all this data and then build insight, understand the customer behavior, then they can give that information back to these consumers and SMEs as value-added services, right? So you can actually build a rapport with these customers by proactively providing right amount of information at the right time. Because looking at all this data, you are able to predict the financial health of a person. You can see how much salary the customer is receiving, what is the income, what is the expense, where you can do data enrichment by looking at the data type of data, who is the payer, who is the payee, where is the information going, when is it going. You can get a lot of cash flow information, you can get seasonality in the small businesses. All this data can be brought in and put into the same system and use machine learning algorithms to see and see the predictions and how things will behave. Now, this information is very valuable. Banks have gathered this information over years, but it is buried in your databases in unstructured or not in normalized manner. So if you can structure this and understand this data, and then you can provide this valuable information back to your customers in a of course after a proper consent, right? So you need to get consent of the customers because you can crunch this data. But if you do so, you will be able to provide much needed value added information for consumers and to SMEs, and that is where the monetization kicks in. And that is where I think the next few years, like fintechs, banks can also start offering these value-added services. Banks do have lots of data in their systems, but they just need to better understand that and use the reasoning behind why, gather insights and start providing. So that is where I believe we should look at and go forward from this point onwards.
Okay. Thanks. I mean, you gave a couple of good nuggets of information here, which is that the banks have historically. I mean, Ken said, I mean, Derek also said, right, there they have all these systems, they are siloed, information is buried, and how do we bring out that information and marry them up and provide a value, right? At the end of the day, as we all sort of an agreement that ISO is a better plumbing, it gives us a better interoperability, but there is something more needs to be done on top of that. I'm seeing some questions are also coming up. So I will rephrase the question here. And I was really intrigued by what Derek said. So I'll first go to Derek. You had mentioned that there are APIs are available and the corporates are wants to interact with the API information. I'll share some of our own experience and then you can overlay that with what you are seeing from your corporate. One of the things that conversation we had was that a couple of corporates are saying, look, bank, I've given you all my data. I've given you my PO information that is already coming as a part of the payments to come through ADI, or now it is going to come in ISO. Why didn't you marry all that together? Because you are receiving my payments as it is you're giving me statements. Why didn't you marry me up? And I will make an API call. I'll give you my PO number or my payment information that I sent to you. And you give me an API response back saying, yes, this PO was paid. Are you seeing some kind of that kind of a conversation within your corporates, and how is this how you're envisioning is creating a lot of APIs to have exchange of information, pull and push mechanism there? Derek, to you.
Yeah, no, for sure. And, you know, as I think, just to maybe go back also to some of the comments that Parth and Ken had made, you know, around data sharing, and that leads into kind of open banking and having the right regulatory framework in place that permits the safe, you know, sharing of that data, and then being able to, you know, once you can share that data in a safe way, you know, protecting the privacy of customers, which is paramount. Back to the trust issue that you started with, Rajiv, and why businesses and consumers deal with their bank. That trust is so important. You know, if we're able to safely share and aggregate and offer the value add, and then be able to deliver that through API mechanisms that are integrated directly into the supply chain or through the customer's systems themselves, that to me is you know, where we're all kind of working towards and trying to get to. You know, I think back to a couple comments that that Parth made around, you know, predictive analytics, you know, and the more data you have in the context, you know, ISO provides context to that data, which, you know, it's so critical, because, you know, back to some of the examples, we need to understand the data in order to then be able to apply a model to that data in a consistent way, regardless of where the data is coming from. So if you have good context of the data, you understand the data, and you can use some of these tools to provide the modeling and provide that information back in terms of value to that customer, I believe they'll pay for that. And that's something that we need to keep top of mind. One more point, I know we're running out of time. Back to AI and the use of AI and the data, you know, we're seeing advantages in the fraud space, being able to, you know, for instance, reduce false positives, right? You know, the more data you have, the better decisions you can make which reduces false positives, which then improves the customer experience. It's kind of a curse sometimes when you have to, trap something and validate with a customer. They appreciate that because we're safeguarding their money, but there's also a negative customer experience associated with that. So the more we can use these tools, use the data, understand the context of the data to be able to reduce those false positives as an example, that can lead to a better customer experience.
Thanks, Derek. And as I'm looking at the time here, and I just wanted to quickly come to Ken, because there was some question was asked in terms of, you said the sharing of data, and there was another question being asked was also, is how you are preparing your corporate customers to get ready to provide some of these additional pieces of information. So what kind of dialogues are you having with your customers? And Derek touched upon something very interesting, that you share information, so in turn, we can provide you better services. So from your point of view, Ken, how are you educating and informing your smaller FIs downstream and or your corporate customers for this journey on ISO side?
Yeah, from an ISO perspective, I think that there is so much information out there that some of it is actually quite confusing. Like one of the questions that was asked there from an interoperability perspective, yes, there's so many flavors of ISO 2022. So we've been going out and just talking to our clients and just trying to educate them. But again, the challenge comes back to the bank to say, which version of ISO are we talking about? Links? Are we talking about cross-border space? Are we talking about a US dollar payment? And so there's a little bit more research that we also need to do and formulate to our clients to say, or make life easy for our clients in terms of ISO. And then the other question you had from an API perspective and a movement of data perspective, from a, again, large corporate perspective, I think we are at a bit of a crossroads right now too, because the large ERP systems, they'll take years to actually change them to be more modernized because it just costs too much money to do. They don't turn on a dime. So I think the interface between the bank and the large corporates from a ERP system perspective, either there will be a layer where fintech will come in to help with the communication, or a bank will have to build an API layer or a translation layer for the corporate itself to be in business still.
Okay, very good. Thank you. Parth, I'm going to put you on a spot as we are wrapping up. I have one quick question. We heard all these things. You travel all over the world. You are meeting all kinds of customers and prospects. From your perspective, how banks can monetize by leveraging data, both in terms of processing and in terms of compliance aspect of it. So I'll give you 1 minute to wrap this up.
Yes, so I think that's a good point. I think banks can offer offer new insights and products and services based on it that we talked about. But banks also are big business themselves, and they need to do a lot of processing in order to process all these transactions. Now, Derek mentioned about fraud detection or reducing false positives. Similarly, there are a lot of places where the manual operations are carried out, right, by the banks. Now, that is also a crunch point, especially in the current world of instant payment and same-day delivery. Everybody wants everything to be done immediately. You can't bring in manual intervention, any of these processes. So that's where AI and data can come in and automate this process. You can learn automatically what the people were doing manually over the last few years. And it can actually repeat that same thing automatically to get this thing streamlined. So it can be applied for straight through processing, cleaning up of data based on historical data, processing of false positives straight away. And so there is operational efficiencies also, which banks can use the data for. And perfect. I think it can be quite useful and make things very efficient and improve the customer service.
Okay, excellent, Parth. Sorry to cut you off because I'm looking at the time. People are leaving. I would like to thank everyone who participated. Thank you, Derek. Thank you, Ken. Thank you, Parth. This was a very informative sessions, and I really appreciate all of your participations. And those of you and the participants, if you want to reach out to me, happy to have a conversations. Thanks again, everyone, and have a wonderful day.
Thanks, everyone.
Thank you.
Thank you.
Yes, thank you. Bye-bye.